And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 24th of March 2024. I'll be doing the weekly market review. Starting with DXY, here we have the weekly time frame chart. You can see that pretty much what DXY is doing, I cannot get a straight read on it. It's trying to run now for the buy side liquidity. It retraced, almost went to the weekly fair value gap, and from there it reversed and started trading up higher. It revisited the weekly and the monthly fair value gap here and it's trading about at the rejection block and about at the 25% of that premium wick. So from there we'll be seeing if it wants to react and start trading down lower, or it wants to continue higher towards this buy side liquidity and potentially these buy side liquidity. Going to the daily time frame chart, you can see we created a high here. We took the high and we started trading down lower. It traded to the bearish order block and filled some of that fair value gap. Traded down lower, run the with equal lows right there, and then it started trading up higher to attack this buy side liquidity. So from what I'm seeing here, we can potentially see some kind of a seek and destroy market profile, but on a higher horizon, on a higher time frame. So I cannot, it's pretty much indecisive for me. I cannot bet on one side in the marketplace for DXY. I'm demanding more intel and more information from price so I can be expecting what price or what side it's be most likely going to be reaching for. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see we are continuously seeing higher prices. We're still in a buy program. We're not trying to pick the top in buy program. We just look for hints. We look for fingerprints if there's any SMT or any potential reversal at the top. But we don't try to pick the top in a buy program and we don't try to pick the bottom in a sell program. So we're still continuously seeing higher prices. I want you to pay very close attention to this low right there because it's going to be crucial for the advancement of this weekly review. I'm going to be showing some things regarding this low right there, this low, which is approximately Monday's low, excuse me, Friday's low of last week. So Friday's from this low, and then we trade up higher Monday, Tuesday, Wednesday, Thursday, Friday. You can obviously notice that fair value gap, bullish order block here, and we have here the bullish mitigation block right there. I didn't want to put it on the chart to keep the charts clean, but we have many bid arrays that are influential here at this point, at this level right there. So we can see some kind of a reversal from here or some kind of a reaction when price trades down lower and try to fill this fair value gap. So we're continuously looking for higher prices. Just remember this low right there on ES because it's going to be important for the rest of this weekly review. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we're also looking for higher prices. Now, if you go to your charts, you'll see that price took the all-time high right there. So it created another all-time high right there. Going to the daily time frame. Now, this is the low that I told you about, which is Friday of last week's low. So you can notice how this low actually reached to the constant of that fair value gap and reached below it, tried to fill it completely, but it didn't do. It didn't fill it completely, and then it reversed and started trading up higher, took out this high, formed a bullish breaker. Now on ES, it didn't take out these lows, and it's most certainly didn't reach below this, below the consequence of that fair value gap. So this would be showing that ES is stronger to the upside, and NQ is weaker because it went down lower, took out the sell side liquidity, and traded below the consequent quadrant of that fair value gap and then reversed and started trading up higher. Now this shows that ES has refused to trade down lower below these lows as it's stronger and smart money or the market makers have more positions in this market exactly than any other market such as NQ or the Dow. Later on I'll be showing you. So you can see how price on NQ traded down lower, took out the relative equal lows right there, almost filled the fair value gap completely, and then traded up higher, breaking out this high, creating a bullish breaker right there, fair value gap. I also included the volume imbalance, so this is a fair value gap and a volume imbalance right there. You can notice how all that time we've been trading at the bullish breaker right there. We have a low, high, low, low, then higher high. This would be a bullish breaker. We consolidated the bullish breaker, and then we broke up higher, and we formed another bullish breaker right there. So from there, price can retrace as it retraced on Friday, and then it can run up higher. We have relative equal highs here, although this high is higher than this high, but we can still see higher prices because of the bodies. We didn't see anybody above these bodies, so we can see price run one more time in terms of body above these highs right there and close above them. So that's gonna be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract, and I'm viewing the weekly time frame chart. You can see also on Dow we've swept and took out the buy side liquidity right there. Go to the daily time frame chart, you can see that this high that wasn't swept or wasn't ran earlier, price swept it last week energetically to the upside. You can see we also formed a bullish mitigation block right there. We have low, high, higher low, then higher high. Now the only market that formed the bullish breaker would be NQ. The other markets such as Dow and S&P or ES formed bullish mitigation block. So these markets would be stronger to the upside when compared to NQ. NQ would be weaker to the upside. So we have a fair value gap and bullish mitigation block price, and also the buy side liquidity. Old highs can also be used as a BD arrays for price to react from it and then reverse and start trading up higher. So we're still looking for high prices. We're still in a buy program in the indices unless or until we are proven otherwise by showing the characteristics and the fingerprints that the market wants to turn and start trading down lower to start the sell program. Until then, we will continuously look for buy signals and we look for buys. Now, I just want to say one more thing here about the markets in terms of how they traded last week. In all the ES, NQ, and Dow, you can see how Monday, Tuesday, Wednesday, Thursday, Friday, price traded up higher on Monday, Tuesday, Wednesday, Thursday. So what we would be expecting on Friday? The thanks God it's Friday setup. And we in fact did see it happening last Friday. Price retraced to about 30% of the weekly range from Monday's low to Thursday's high. It retraced and woke inside the fair value gap. So I think that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. So you can see here on EU, there's pretty much nothing that I'm gonna be talking about. I would be saying that this is the last line of defense. I want to see price from here just run up higher, inversion of every gap price, run it up higher, traded above it, closed, retraced, run up higher. It's retracing now and working inside the inversion of every gap one more time. So if we close below it on the daily time frame chart, I would be saying that price can potentially run for this low. Otherwise, we can see can see price reverse from here and start trading up higher towards the buy side liquidity. So I still cannot get a straight, clear, crystal clear read on DXY and the Forex market that are related to DXY, but because I don't have much info that I can be working with, and it's pretty much consolidation, and I'm rather staying outside of this market rather than gambling in a market that I cannot get a read on it. And there is no shame, there is no false in trying to get a read on a market and you cannot get a read. It's fine, it's absolutely fine to not be able to get a read on such market because the markets aren't going to be crystal clear or readable at all times. There are some times of chaos where there's going to be a lot of manipulation that you're not going to be able to actually anticipate and try to get a read on what the market is trying to do, and it's absolutely fine. So we wait until we get much more information, and we let the pigs get slaughtered because at this time, many of retails they're gonna be trying to fulfill their quarter quarterly goals. Now the year is divided into 4 quarters, and we're now approaching the end of first quarter. And many of the people are going to be trying to fulfill their goals in the last 2 weeks of this quarter. So many of the retailers are going to be just recklessly gambling, trying to fulfill and trying to achieve the goals that they set for this quarter. And at the end of the day, they're just going to be gambling and most likely losing all of their money. So we let them gamble and we just wait for more insights. So after all of this chaos that is happening, after everything's happening, we will just be going to the markets and we'll just be picking our shots. We'll not be holding a machine gun, we'll just be holding a sniper and just 1 to 2 trades, and that's gonna be it. Going to the daily time frame chart, the same thing. You can see price is pretty much in a seek and destroy. I would say it's not giving a clear direction of where it's trying to move. So I'm keeping the markets run, and then when I get much more information and much more intel from price, and then I'm gonna be sharing what I'm thinking about DXY, Euro, and Pound. Otherwise, there's no read for me on these markets. I don't know where they're gonna be moving towards. I'm favoring, gun to my head, I'm favoring the buy side liquidity over the sell side liquidity, but we can see anything happen in the marketplace. So I think that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, or also known as the cable. Here I'm viewing the weekly time frame chart. You can see how price retraced all the way down lower to the consequent quadrant of that discount wick, and it has retraced and walked inside the weekly fair value gap. And then from there, once it touched the weekly fair value gap, it retraced and closed above it. You can see how we are also closed below the weekly fair value gap. Going to the daily time frame, you can see how we sweep the buy side liquidity, and now we can potentially see price take out these sell side liquidity, which I mentioned actually about a week ago or 2 weeks ago. I mentioned that on EU we retraced and walked inside the monthly fair value gap, but on GU we didn't. So you can see how on EU we walked inside the monthly fair value gap, but on Pound USD we didn't walk on the monthly fair value gap. Now go to your monthly charts or go to my weekly reviews in the past, and you'll see me viewing the monthly charts of Euro USD and Pound USD. Otherwise, you can go to your charts and you can look them up by yourself. So we have a monthly fair value gap. Price did not reach to the monthly fair value gap. Now at this low on EU, price reached to the monthly fair value gap, but on Pound it refused to reach to the monthly fair value gap and started trading up higher and took the buy side liquidity. This buy side liquidity, EU couldn't take out this buy side liquidity right there. So it refused to take out the buy side liquidity and started trading down lower. So from here, it's kind of interesting to see how price is going to be trading from here. So we will get more insights and more intels to see how price is going to be moving in the future. So it's pretty much indecisive for me here. This is the daily time frame chart. Price took the buy side liquidity and it started trading down lower. Now we don't have any SMT. If you just notice that on EU, low, lower, low, lower, low. Pound, low, 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 low. So there's no SMT between the markets. And if you go to DXY, high, higher high, higher high, high, low, higher low, higher low. So pretty much we don't have any SMT between the markets. DXY, or the US dollar index, EU, also known as the fiber, and Pound USD, also known as the cable. So we don't have any SMT to be proven between all of these markets that can potentially just strengthen or confirm that we're going to be moving from here towards the sustainability. Now, this is not a panacea. So if we don't see an SMT, that doesn't mean that price cannot reverse. No, it can reverse, but we would be seeing that as a confirmation that would tell us that the market is going to be reversing if we see an SMT at the top. Otherwise, it can also reverse without an SMT. So I think that's going to be pretty much it for this week's review. I hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.